Welcome to AZNHAs February Education Session. I'm Laurel Smith, an AZNHA Board Director and Chair of the Education Committee. Thank you for joining us today and happy Heart Month. Just a reminder, our conference is coming up. It will be held August 25th. And within 30 days, you'll receive information about how to register to attend the annual event. And we encourage all of you to register quickly because we are expecting a very big turnout this year. A little housekeeping about today's session. You will all be muted to avoid noise disruptions. We will have Q&A session at the end of the main presentation, and you may send your questions at any time using the Zoom chat function or hold them until we open the Q&A, at which time we will unmute everyone. We are recording this session and it will be posted on our website for future reference. Our featured speaker is Dennis Powers, Senior Commercial Line Specialist with InZone Insurance Specialist. He specializes in providing insurance programs for home health and companion care companies, as well as he has direct access to some insurance carriers that most other agencies do not have access to. For those of you who were on last year's August call, our featured speaker was unable to make the call. At the last minute, Dennis stepped up and presented for us on workers' comp. However, it was not advertised for Dennis, and we felt that information was so good that he deserved the chance to have a bigger audience. So if you have any interest in a great content presentation on workers' comp, please go to our last year's August 22nd session on our website and view that session. Dennis, I'd like you to take things over. The floor and the screen are yours, and we look forward to hearing what you have to say this time.
Thanks, Laurel. And last time was interesting because I was just a participant, and suddenly a speaker dropped down. I'm like, I can present if you want me to. So thanks for the opportunity, and thanks for mentioning the last presentation. Workers' compensation is a big expense for most of the members. It's tied directly in with payroll, but you're not going to lose your business because of your workers' comp. There's no limitations to your work comp policy. The subject we're going to talk about today is called Insurance 101. This is a presentation that I used to do once in a blue moon. Just a very, it was a very basic presentation going over all the other insurance that you probably don't think a lot about, you probably take for granted, like liability insurance, crime, umbrella, property insurance. But then COVID hit, and with COVID came a lot of new exclusions to insurance policies. So let me share my screen and get that presentation up. Let me see where it is first. Are you able to see that, Laurel? Can you see the presentation now?
This time it did not come up yet.
Oh, you know what? Let me try that again. It's always that getting the thing shared. Oh, here we go. There was a lot. I guess I have a lot of windows open here. Okay, here we go.
There it is. Thank you.
Here is a presentation. So my background is in claims. I used to be a claim adjuster. And when I got into sales in 2008, I started doing work comp presentations. Again, that was a big expense for a lot of people. I met my first home health care agency. It was a home instead in Illinois who came to a work comp presentation I was doing, and he was having some bad experience with claims and his premiums going up, and he wanted to work with me, but I had no comfort level for the other insurance. Your industry has a lot of different exposures than a manufacturer or a contractor or a distributor would have. Most of you are working with seniors, not all, but you might work with children and young adults, whatnot. But I was very nervous about trying to help this guy. It took me a while to get comfortable. So when COVID hit, I started seeing all these new exclusions come out. So when I was out there at the conference last year, you might not have seen me. We used to be Lamb Little. We merged with InZone in December of 2021. I was there under end zone, but people were looking for me under Lamb Little. And, at that time, the exclusions were starting to kind of come to the forefront. And there are exclusions on policies that people don't know about. And we're going to talk about that right now. And again, it'll be recorded. Please look at the work comp presentation if you want to. With either presentation, if you're having a hard time falling asleep, just go on the website and pull up one of my 2 recordings and you will be out quicker than you can imagine. So here's what I'm gonna try to do during this presentation. Again, with a little levity, I'm gonna try to explain to you what are the important coverages you really need to be thinking about. I'm gonna dig deeper into the exclusions that have been added, most of them during COVID, and talk about how problematic some of these can be. And I'm going to give you real examples of claims that have happened, specifically to clients of mine since 2010. So even though I don't live in Arizona, I have a lot of history there. I've been going there since 1994. I'll be there in April. I'm hoping to be at the conference in August. So hopefully I can meet some of you. But let's kind of dive into the presentation and, where do you find the exclusions? Sometimes they're right in front of you when you open your policy, but a lot of times they add the exclusions to each section of your policy. So your insurance policy, again, we're not talking workers' comp. Some call it a package policy. That's your auto, your umbrella, your crime, your liability, abuse, and molestation, kind of all lumped into a package. And in the package policy, you'll have a section for property insurance. You'll have a section for general liability, professional liability. And usually they'll throw the exclusions kind of at the front of each separate section of the policy. Okay, so this is what they kind of look like. I'm using Travelers as an example here, but the idea is don't assume that because you have an insurance policy, you're covered for everything. And so when COVID hit, I brought back this presentation and we've been doing this for the Home Care Association of America since 2020, educating their members. And I was so excited to finally be able to do it for your group, specifically in Arizona. You're going to have a little bit different type of exposures that we would have up here in the Midwest and other parts of the country. But I'll start with property. And this was a slide that I would try to get through in about 1 minute, because up until 2021, from 2010 to 2021, I had never seen a real legitimate property claim. I had one client in Indiana who had a flash flood. And as you see here by the slide, floods excluded, viruses excluded, earthquakes excluded. Even though excluded doesn't mean you can't buy back coverage. Some carriers will let you buy back earthquake. Some carriers will let you buy flood. And again, I don't think flood's a big exposure for you all out there, but it is in a lot of other parts of the country. Okay, but here's what happened. I had a client who had a fire in his building. He didn't own the building, he was an occupant. So he was just leasing space. And in another section of the building, there was a fire, but it caused all the sprinklers to go off. And so, and not just that, there was smoke damage. So this client of mine who was in Kentucky, he couldn't operate out of that building any longer. So so he not only lost all of his furniture because it was wet or smoke damaged, but he was also displaced. Okay, so that was one thing that happened. I want to try to share. This is the big one though. This is the one where can you see, Laurel? Can you see this one now? It's a picture of a building on fire.
No, I just see the commercial property.
Okay, let me do that. I gotta probably do the share thing again. This is the one where if you see this photo, if I can get it to you, I'll figure it out. The day before Thanksgiving of last year, I'm driving through Michigan and a client's calling me, and my phone's blowing up, and I'm like, all right, is everything okay? I have my guards down. So Wednesday before Thanksgiving, and she tells me that her building's on fire. And I thought to myself, your building's on fire. I've never heard that happen before. So it truly, I'm having a hard time getting a photo up. Her building was completely engulfed in flames. Okay, so that happened a few months ago. My other guy a couple of years ago. But for the first time in 10 years, I've had two clients that not only had to replace all their furniture, but they also had to go find a new office to operate out of. And my client in Indiana who had to fire, she's displaced for at least 1 year. Okay, so here's what the parts of the policy that you probably don't ever think about. You probably think this will never happen to me, just like my client did. And by the way, I may not show the photo here, but if any of you are interested, please visit our website, inzoneinsurance.com, click on the blog section, and you will see me having a 20-minute conversation with that client of mine, going over the whole thing. You'll see the photo of the fire, and you'll see how it turned her world upside down. So here's what I want you to focus on with your property insurance. Because again, people take it for granted. Building insurance, make sure that you're insuring your building for the reconstruction cost. What it will cost right now to rebuild it. If you haven't had your building valuated in the last 3 or 4 years, pay a few $100, have someone come out and have someone say, with the cost of steel right now and lumber and shingles, blah, 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 it would cost X amount of dollars. That's what you want to shoot for insuring your building for. Okay. But a lot of you probably don't own your building. Most of my clients don't, maybe a 10% do. Most are tenants in the building. So you're responsible for insuring your contents, your desks, your Hoyer lifts, any kind of training equipment, computers. That client of mine in Indiana, when I met her, we talked about her insurance. She went room by room and she estimated what she thought it would cost to replace everything in case of a fire or a tornado. And so we bumped her limits from $25,000 to $80,000. And sure enough, the insurance company is going to pay just under $80,000. And we're talking replacing paper, pens, things you don't think about. I'm on my rolling in my chair. I have one of those things on the ground that I can roll my chair on. The chair by itself is probably about $400 to replace my chair, $20 to replace the plastic that's rolling on right now. So this is probably the least amount of you'll pay for your insurance as your property insurance. I always recommend to be over-insured, okay? So we're talking about business, personal property right now. So walk through your office, room by room, and just try to estimate what it would cost to replace everything down to the paper clips, pens, and pencils. Because if you look at the blog on our website, she did not think about that stuff. But here's the part that's also super duper important for you to understand. Do you have extra expense coverage? Now, business income would be if you had a direct damage to your building and you were losing income revenue because you couldn't keep your business going, which usually isn't the case with what you all do because your employees can still get out there and do their jobs. So I have never heard of or seen a business income loss, but 2 times in the last 2 years, I've had clients that had to go rent a new office, and that's an extra expense. But also on top of that, they had to either buy or lease new office furniture. So again, look at your limits in your policy. You might be surprised with what you see. People take it for granted, but it's really happened now to 2 of my clients in the last 2 years. So I'll move on. I probably spent a little bit more time there, but that claim was so catastrophic. And the reaction my client had, she couldn't believe how much time she spent rebuilding things. I just want you all to think about that. General professional liability. Some on this call and this on the presentation and members of the association are non-skilled. Others are skilled care. Okay, that's a big reason why you have general liability and professional liability. It's very important for you all to know if your policy separately handles general liability and then separately handles professional liability. When I was there last year at the conference, which I think was in April, there was an insurance carrier there that had a booth, and they lump general liability, professional liability, and abuse and molestation under one limit. That means you have less coverage than most other insurance carriers, because most other insurance carriers separate general liability, professional liability, and then most have abuse separate. Some add abuse as a sublimit to general liability. You want to have separate silos for them to feed from, not one limit for three different things. That carrier was called is called Secura. They had a booth there. They are a quality insurance carrier. You just need to know with their policy, the way that I last saw it, they were all lumped together. Okay. So the reason professional liability exists is because there's an exclusion on a general liability policy for skilled care usually, or whenever you're handling a client. So if you're helping a client in a wheelchair off of a toilet, out of bed, and they're injured, professional liability would generally handle that type of claim. General liability, the few claims I've seen, a caregiver brings bed bugs. You may laugh, I've seen at least a dozen claims of caregivers bringing bed bugs into the client's home, and then the insurance carrier has to pay $2 or $3 grand to have the home cleaned and the bed bugs removed. You might have a caregiver employee cooking in the kitchen who starts a fire. That would probably be a general liability claim. So very different types of claims, and you want to make sure, ideally, you would have two separate silos, two separate limits, but just know, I know that specific carrier, again, quality carrier, but I want people to just know that they lump everything together. Pure consent is important. Your brand is very important to you. So do you have say in when a settlement happens? So it's always important to know if your policy requires the claim adjuster to talk to you and get your consent before they'll settle the claim. Because a lot of insurance carriers, for workers' comp, for liability, the adjuster has final say, and it doesn't matter what you think. So it's important, if it's important to you, do I have any input into a settlement? Okay, now let's get to the exclusions. Employment practices liability exclusion. I see it on all policies. This is an example of a coverage that is removed by the policy, but you can come back around and buy a standalone policy. Employment practices liability, good examples would be wrongful termination, discrimination. I've had a couple sexual harassment claims. Those are usually, we'll talk about this later in the presentation. You can buy back coverage for that, but it is excluded from these policies usually. Here's the big one, communicable disease exclusion. This is the exclusion that got me back to revamping this presentation and getting out there. I probably did this presentation 6 to 8 times for the Home Care Association of America as webinars, either nationally or for state chapters. People may scoff at this and say, oh, this will never happen. I have 2 clients that are being defended by their insurance policies, and one of them is a really bad one. It was a caregiver, 24-hour shift. You had multiple caregivers coming and going. This is in 2020, this happened. Caregiver refused to wear a mask. Other caregivers did. My client required that to happen. Client's son kept coming by to visit his mom and would see this one caregiver never wearing her mask. Okay, sure enough, caregiver comes down with COVID. Within a week, the client has COVID and the client dies. Client passes away from COVID, a lawsuit. That insurance policy I have for that person, that was in Charleston, South Carolina. My other one's out here in Illinois. They're both being defended. Okay, I have insurance carriers that do not have that exclusion. Secura has that exclusion. Philadelphia Insurance has that exclusion. If you're sued, and we're not talking just COVID, we're talking a flu, a common cold, any kind of communicable disease, especially in the Philadelphia policy, again, a quality carrier, they just happen to have this exclusion, right? COVID's not going away. Other communicable diseases can happen. The ambulance chasers now know that certain insurance carriers are not going to defend their policyholders. You need to know if you have this exclusion. I've identified at least 2 carriers that have it. Care, custody, and control exclusion. This is really more of a housekeeping thing. It's important to know if your policy will defend you, well, not defend you, pay for damages that your caregiver may cause while doing some light housekeeping, like knocking a vase off a counter. I literally turned in a claim on Monday. It wasn't even cleaning. The caregiver was getting up, put her hands on a table, and that table had a $1,800 vase on it. She shook the table, the vase fell off and it broke. You just need to know if you have that exclusion, which is common in policies, but usually an opportunity to buy back coverage for that. This is more of an annoyance than anything. My 2 biggest claims I've ever seen, one was almost 2 million. The other one was 250,000. Both the biggest claims I've seen under general or professional liability were both wheelchair claims. And the one was pretty serious where the client fell out. She broke both her legs. She had to have both legs amputated. Okay. They paid out $1 million. That's the limit. The general limits are usually $1 million per incident, $3 million aggregate, which means if you have more than one claim, you have $3 million for multiple claims to feed from, up to $1 million. And then in a perfect world, you'd have $1 million umbrella on top of that. Okay, next slide here is what that exclusion looks like. On some of the policies, they throw it right out there. You can't miss it. I mean, I think in the Philadelphia policy, it says absolute communicable disease exclusion. That means they will not defend you. If you get sued, I mean, you are literally on your own. So I just prefer to have policies that cover more claims. That's how I try to do business with my clients. And I lean towards carriers that don't have those exclusions or have minimal exclusions. Crime coverage. This is the most common claim that I see. At least twice a month, a client calls and says, one of our clients is alleging our caregiver, our nurse, stole something. Jewelry is missing. Someone took a credit card and used it off premises. Someone went grocery shopping for the client and padded and added their own groceries. You name it, I have seen it, and it happens often. Okay, what you need to know is the difference between employee dishonesty and third-party crime. Employee dishonesty protects you as the employer. The best example I can give you is embezzlement. If you let someone do your banking for you and they're cooking the books and stealing from you, employee dishonesty would defend you. I have never seen a claim like that. Most of the clients I work with, it's a husband, wife, or the owner does all that. And so I've never seen a claim like that. But third party crime, that's the one you want to look to make sure you have. It might be called a crime bond, crime fidelity bond. A lot of times it's theft from client or third party theft. The limit I like to see is $100,000. Some carriers can only go to 25,000. I prefer to see 100,000 because I've seen claims 80,000, 90,000. I have some clients that have $250,000 worth of coverage, and it isn't that much more premium to raise your limits. Okay. Prior theft, dishonest act exclusion. So a lot of you wonder, is this person we're going to hire insurable? And you do criminal background checks, you do motor vehicle reports. The only language I've ever seen in any insurance policy is in the crime policy. And it kind of reads like this: knowingly hiring someone who has committed theft or any other dishonest act. And they don't define dishonest act. So for me, if you have a candidate who recently has shoplifted, written a bad check, to me, you might not be covered by your policy if you turn in a claim and they pull that criminal background check. I have never, ever seen an insurance carrier deny covering a claim because they pull the criminal background check. However, there's always that first. But I mean, there's nothing in any policy about age restrictions. Can I hire someone who's under 21 or over a certain age? Insurance carriers cannot be that specific in their insurance policy language, because if you don't hire someone because of that, you could be sued for discrimination, but so can the insurance carrier. So that's when you need to look out for, is if your staff or you yourself are interviewing somebody, if they shoplifting shows up, you might have to walk away from that person. Again, any questions, feel free to ask them now. I'll try to answer real time. Sexual abuse and molestation. This is one that jumped out at me right away in 2010. It's if you're going to have a big claim, if you're going to have a multi-million-dollar claim, it's going to be here. Sexual or physical abuse of a client. I had a very, very close call with a client, and we don't know what's going to happen with it yet. But the situation was, without getting too detailed, it was a female client, male caregiver. Male caregiver took advantage of the situation, and a friend of his also got involved and took advantage of the situation. I'll leave it at that. I literally could not forward the email from my old Lamb Little account to my new InZone account because of the content in the email. Look at your limits here. This is why it's important to understand. When I first started insuring home health care, I have about 150 to 170 clients all over the country. I've got quite a few in Arizona. When I meet someone for the first time, especially back in the past, it was not uncommon to see $100,000 limits with a $3 million aggregate. I asked Philadelphia Insurance, again, a quality carrier. You know, at that time, they were a big writer of home health care and companion care, and they still are. They still are. Again, quality carrier. They shared their loss data with me, and what jumped out at me was a $366,000 claim for an abuse claim. And if they're going to happen, they're going to be big, and $100,000 isn't going to be enough. Okay, so what I recommend, and again, I want to share stories, but I also want to share limits of insurance. My preference is $1 million per incident, $3 million aggregate. You can get that from most carriers, and it won't cost you that much more. But if you have 100,000, 300,000, not telling you to fire your agent, but you should think about that. You're grossly underinsured. Okay, so do you have a written policy in place? Does your application ask about priors? What kind of training are you doing, and how often are you doing it? And the big reason why I want to harp on those limits is the typical umbrella will not go over abuse and molestation. And we'll talk about the umbrella in a little bit. Again, any questions? I'm talking fast because I know I got a little less time here with the group. But again, if you visit the website and you can watch this, or InZone Insurance, we have some blogs that might spend a little more time going a little deeper on some of these. This slide right here, I could talk for 4 hours and still not cover everything here. But I'm not going to. I'm gonna try to keep it quick. Hired and non-owned auto. This is the bane of insurance carriers' existence with home health care and companion care. Your employees driving their own vehicles or using the client's vehicle for transport. Okay. The big takeaway for you all to remember here is insurance always follows the vehicle first, then the driver. Okay, so I recommend that you understand what the state minimum liability limits are. And just so you know, in Arizona, unless they've changed recently, it's $15,000, it's 15-30-10. $15,000 for bodily injury to one person, $30,000 for bodily injury to two or more people, and then $10,000 for property damage. So if you hire a caregiver or a nurse, don't have them bring in the auto ID card from their glove compartment. Have them actually bring in their actual insurance policy, which shows their limits. What insurance carriers like to see, 100, 300, 100, 100,000, 300,000, 100,000. Okay, if you have the state minimum, what happens is if your employee has an accident driving their own vehicle, or again, the client's vehicle too, that the policy will only pay up to the limits. If someone's seeking more than that, your insurance is going to drop down. So if you can make a note of what those limits are for Arizona, if you can start maybe a spreadsheet with your candidates and maybe even current employees, maybe you can start shifting around caregivers and nurses that transport or run errands to the grocery store with the lower limits. You move those clients to someone with higher limits. It's just important to know because you don't want your insurance to drop down, and I've seen it happen too many times. Okay, who pays for motor vehicle reports and how often do you do them, or how often is it recommended? Generally, you pay for those, and you should be doing them for every candidate that you hire. I do have a cheat sheet from Philadelphia, Hanover, and Selective. These are internal guidelines that all three of those insurance carriers use. If you're interested, please email me. I think the last slide will have my contact information. I'm happy to share those with you. They're all very similar, but these are the guidelines that they use internally to decide if someone's insurable or not. So if they're going to use that, maybe you should as well. Okay. And ideally you would do those every year, but there's a cost to that. So I know a lot of insurance carriers are okay if you do it at least every 3 years, but I highly recommend doing that. And same thing with criminal background checks. Don't just do it one time because anything could happen after the fact. So at least at a minimum every 3 years for MVRs and criminal background checks. Drive other car coverage really quickly. Every once in a while, I'll meet someone who their only vehicle is a company vehicle titled to the business. Okay. Drive other car coverage bridges a gap that you would need. Let's say if you rented a car from Enterprise, if you borrowed a friend's car and you drove their vehicle. Again, if you borrow a friend's car, their insurance is going to react first, then the driver, which would be you. Drive other car, I see it sometimes, but I might as well tell you about it because people have 3 marketing vehicles and those are the same vehicles they use for personal use as well. If that's your setup, make sure you have drive other car coverage that would protect you if you use someone else's vehicle or whatnot. I talked about driver guidelines for you and from the carrier, but lastly, are wraps covered? So if you buy a vehicle, like a marketing vehicle for your business, and the wrap is included in the purchase price, then yes, it's insured. If you add the wrap after the fact, and I think wraps are usually $1,500 to $3,000, if you add it after the fact, it will not be covered by your insurance policy unless you add it. Again, Arizona is a different climate than a lot of the other parts of the country. Out here in the Midwest, hail is a big issue. But if you have a car accident and you need to fix your car up and replace that wrap, you may not be covered for the wrap, but you would be for the car. So it's very inexpensive to insure a wrap. So make sure you understand if you're covered for that or not. The umbrella. What does it go over? What are the usual limits, exclusions? Okay. The umbrella typically goes over general liability, professional liability, and your auto. Company-owned autos, and also the non-owned auto liability. So again, general liability, professional liability, auto liability does not automatically go over abuse, doesn't go over property. It can go over work comp, but it's not the work comp you think it is. Your work comp policy has no limitations for an injury. It's a whole separate conversation, which I think I talked about on our blog. Okay. Typical limit is $1 million. If you have multiple locations under one policy, you should be thinking about a higher limit of maybe 2 million, 3 million. It's going to cost you more money. But if I have people that have 3 locations on one policy, $1 million is probably not enough. In that situation with that claim where the caregiver was pushing the client in the wheelchair and didn't have her secure in the wheelchair, that client fell out, she broke both her legs and they amputated eventually. Here's what happened. This is how the claim was settled. It was this simple, but this really sells the umbrella for sure. The attorney for the client's family said, what are the policy limits to the claim adjuster? Claim adjuster said they've got $1 million for liability. They got an additional $1 million for the umbrella. So a total of $2 million. So the attorney said, well, give us $2 million. And the adjuster said, we'll give you $1.5 million. And they literally met on the same conversation. They met in the middle at $1,750,000. That's probably how it's going to happen. Again, I was a former claim adjuster. That's usually the first question an attorney is going to ask me as an adjuster. What are the limits? What am I working with? They're not going to really go after you. They're going to go after your insurance policy. Okay, so that's why it's always really important to understand what you have, what you don't have. EPLI, Employment Practices Liability Insurance. So I talked about it a little bit earlier. It's a policy that is excluded usually. Maybe some carriers might throw in a little bit of coverage. It's not enough. My recommendation for a small to mid-size client would be $500,000 worth of coverage. I do have clients that have $1 million. I don't have one client that has over $1 million. I haven't had a claim over a couple $100,000. So that's why I feel like $500,000 is okay. I have seen all of these claims here. Wrongful termination. Those have usually happened when a work comp claim has been settled and the employer lets the employee go. It's almost like a retaliation type of thing. So I've seen a lot of claims like that. Discrimination. I've seen some discrimination claims. A really crazy one in Indiana where the majority of the workforce was female. This employer hired a male caregiver to work with a client that was a heavier client that needed, it was just a big male caregiver this guy hired. Well, a female candidate who didn't get that job sued and won for discrimination. I don't see that often, but I have seen it a couple times. I've seen wrongful termination quite a few times. Wage and hour defense. So this policy is going to cover you for damages and defense for wrongful termination, discrimination, harassment, some other things. Wage and hour is just defense coverage. It's usually $100,000. It's not automatically included. I have had a couple claims for that. And it's claims where the caregiver sues, the employee sues. It's usually like a 24-hour type of assignment where they're living there, they're there for more than 8 hours. If you have a policy like this, make sure you have this coverage, wage and hour defense. Again, it's only defense. The maximum is like 100,000. It's super cheap to add it. You might not have it. It's not thrown in there. And then I've had a couple sexual harassment claims. Here's the thing to keep in mind with employment practices. This is the one that has a high deductible. Okay, keep an eye on your deductible. It really has spiked since COVID. It wasn't uncommon to see a $5,000 deductible, $10,000 deductible. Okay, I've seen it get to 25,000, 35,000. So don't be asleep at the wheel. If you have this policy, grab it. Look at your premium. The premiums haven't gone up a lot, but the deductibles have. And if it's over 10,000, you probably could find a carrier that will do it for that. I mean, think about it. You're going to pay. I mean, the carrier will defend you. They'll invoice you up to the deductible limit. They'll do all the work, but they're going to invoice you for it. So you have a lot of skin in the game on that. Any questions? We're almost done, by the way. The next slide, couple slides here. I think it's important, but I can look you all in the eyes right now and tell you, I have never seen a cyber claim for this industry. Not only have I not seen a claim for this industry, I've asked big carriers that provide cyber coverage for all walks of life, and they can't even give me an example of a cyber claim against a home health care, hospice, non-skilled companion care agency. But I have seen claims. I've seen claims from manufacturing clients, social engineering where someone, sends a fake invoice. Someone hacks into your system, like a cyber attack, and says, if you don't give us X amount of Bitcoins, we're going to wipe out your entire database. So I can't listen, if any of you have had one or heard of one, please let me know, but I've never seen one. If I've got 150 to 180 clients, 3 or 4 of them have this coverage. And that premium has gone up and up and up and up because believe me, you turn the news on, cyber attacks are all over the place. I just can't pinpoint for your industry. And then, some of the guidelines that underwriters look for now, multi-factor authentication. Whenever I go on Chase or my credit cards, I get a backup text with a code to put in there. Do you have a cloud-based backup? Some insurance carriers will not even offer a quote for cyber if you're not doing all of these things. So that's kind of it. I spoke fast because I know your time is valuable. Again, these will be recorded on the website for the association. I do a deeper dive on our blogs on inzoneinsurance.com. Any questions I'm happy to answer right now. Here's my contact information. I'd love to work with more of you all. I come to Arizona. I'm going to be there in April. I'm going to be there hopefully in August at the convention. I hope to have a booth there again with InZone. If you ever want a policy review, I'm happy to do it. I'm not desperate to sell insurance, but I love this industry. The people I've worked with have been just good people. And if I can look over a policy, it takes me 10 or 15 minutes. And I'll tell you if your agent's doing a good job. I promise you. It's up to you. But Laurel, I'm going to pass it back to you. Thanks for the opportunity to present.
Dennis, thank you so very much for that. And thank you for the very informative and helpful information. I didn't see any questions in the chat. So if there's anybody on that would like, if they would unmute yourself and ask any questions, I'll be silent for 30 seconds and see.
And Laura, while you're doing that, I do want to say one thing though. A lot of insurance carriers have dropped out from both workers' comp and liability insurance because of COVID. There were so many lawsuits because of COVID, especially with nursing homes. So Cincinnati Insurance is a great insurance carrier. They bowed out twice during COVID. And right now, all they will focus on is writing new business policies for hospice. So that's one less option that all of us have. Hanover Insurance, that's a carrier I'm the most comfortable with right now. They don't have the communicable disease exclusion. Philadelphia and Secura, good insurance carriers. If you have that exclusion, if you're comfortable with it, great. But no, you haven't on those policies. What I'd like to do is just create a culture change. People maybe reviewing their insurance policies and understanding what they do and don't have, or they have too much of or not enough of. Because I think a lot of people take that policy for granted and they focus on the cost of the work comp policy. So look through your policy. Hopefully there's enough information in this recording where you can just look at your policy and align it with what we talked about and make decisions based upon that. So thanks again, Laurel and Linda.
Thank you, Dennis. The AZNHA Board of Directors want to thank all of you for participating today. Our March session will be held Wednesday, March 15th. Our speaker will be Tim Rowan of the Rowan Report. He'll be talking about a better solution to hiring caregivers, not old theory about hire 25 in hopes that 2 will work out. So be sure to join us. If you would like to join us, it is important that you RSVP for the topic. Again, thank you to everyone. Dennis, that was great information. I hope that our members get some really good takeaways from that and they get better coverage. Everyone have a great afternoon and happy Heart Month. Bye-bye.